Hi, good morning. Good morning. This is Mayor Valensky with Driving Markets, but static at the moment in my office. Okay, so let's kick off. I want to talk about mainly commercial property and what's going to happen in the US with the regional banks. All right, so as you're well aware, WeWorks has gone bust. It's gone from a $47 billion valuation, which in my opinion at the time was well overvalued. It just didn't happen, but went from $47 billion valuation to bust. WeWorks has got multi-leases, obviously around the US and in other jurisdictions, other countries, and it was very badly managed. And of course, you've got all these startup investors, hedge funds, they invested in WeWorks. I don't know why they believed on the concept. It was massively overvalued, overcost, overpriced, badly managed, and all the other factors. But yet, of course, everyone in the low interest rate environment, which we've been in for the last since 2010 up until 2022, January 2022, they just invested in anything that moved was invested in. So WeWorks has went bust. Now, why am I mentioning WeWorks? Because WeWorks has got multiple leases that they've just now walked away from, many of them in the United States of America. Now, the United States is suffering in the commercial property sector. It's suffering from a particular downturn aggressively in certain areas. And that downturn is due to crime, due to low business volumes, due to homelessness, immigration, drugs, a whole array of answers. And you've got everything from San Francisco on the West Coast to Portland and Oregon that are properties that are just no-go areas. You've got huge commercial buildings there that are just laid empty or have become derelict. Now, the landlords have effectively are walking away, and those loans have come in from the regional banks. There's about 4,600 regional banks in the US. Now, what happens is that those banks themselves have loaned money on a commercial loan basis. Obviously, they are second-tier banks. We're not talking about the top-tier banks. We're talking about the second-tier banks that deal with retail business. So they deal with all the checking accounts, the investments, the brokerage, the loans, debit cards, credit cards, car loans, etc., etc. Now, those regional banks have effectively been in trouble since the beginning of 2023, but have been in trouble much earlier than that. However, it was highlighted in 2023 with the collapse of Silicon Valley, Signature Bank, First Republic, Silvergate Crypto Bank, etc. So the banks have been in trouble. Other banks have had a run on the cash. There's been a huge amount of money withdrawn from regional banks and moved elsewhere. And that regional banks that are lending money in the commercial property sector are going to fail. Now, what's going to happen is that those regional banks are going to need a cash injection. Where's that going to come from in the US? It's going to come from the Fed, and it's going to come from the US Treasury. So what you've got then effectively is some sort of manipulation likely to happen in 2024, where a few notes will be added to the spreadsheet, the Excel spreadsheet, and these banks will be bailed out. Now, the question is, how are they going to allocate that money? Well, the Fed has a huge printing press. You just press the button and out comes the billions. The problem is, in a high inflation environment, what you're going to have is an aggravation or a provocation that inflation will rise further, and it will rise further probably to around about the 30% level if there is another printing press bailout of the US regional banks. Now, what will happen is that the top tier banks will be forced to merge or buy out the regional banks. But the top tier banks will not want to take on toxic debt. So what they'll do is they'll be offered just the beauty net asset, profitable assets of the banks, and the toxic debt likely will be parked on the side by the Fed and by the US Treasury. The Fed is printing huge amounts of bonds at the moment. 500 billion was printed, debt was issued, I should say, not printed. Debt was issued just recently, and that is going to increase the interest payments of the Fed and therefore cause the US to go down even more. So commercial property is on the way down in the US. They could solve the problem by just converting the commercial property into residential property, but then you've got to deal with the unions and all of the local regulatory laws, and that is going to be delayed tax. But that would be ideal because that would immediately release pressure off the residential market and lower prices. But no one is thinking out of the box at the moment, especially the Biden administration, which has an election coming up in November. And what they're likely to do is they're likely to cast over or paste over or mask over the actual problem until after the election. But the problem is getting bigger, and there is a regional bank crisis coming. You can follow me on Instagram and also a Telegram chat, private chat group that I have that you can join also. And hopefully you'll subscribe, share and enjoy the footage, enjoy the production. This is Mayor Walensky with Driving Markets. Have a good day.